So today is Monday, 21st of July. This is the 4-hour time frame in gold. We had this fair value gap formed here, and this is new day open. Monday's this week's new day open, or new week open as well. You'll notice it comes into the 4-hour fair value gap and rejects, closing above, forming a bullish engulfing candle. This bullish engulfing candle becomes our dealing range. We wait, and then we wait until the new 4-hour candle forms and taps into the discount of this dealing range. I'll add a separate rectangle right here. Rename it to 4H discount. So you're waiting for price to come into this discount, and then you engage in the lower time frames. So you can see this candle formed, opened, came down, and then went up. As it came down, it tapped into our 4-hour discount. So as price is playing around this area, we want to look for entries in the lower time frame. So let me just mark the area with an arrow. So you want to look for entries in this candle as it plays around in this discount, and in the lower time frames we try and catch that trade. Now, so this is our close of the 4-hour candle. You can see all this time price was playing above the discount, then it came into the discount and then went up. But first of all, you want, as price is playing above this discount, you want to ask yourself, why would price want to come back into the discount, this 4-hour discount? Let me localize it. So if you look to the left, you'll notice there was a fair value gap here, right? So we expect price to come to this fair value gap, because this fair value gap is inside the discount of the 4-hour discount of our dealing range. So 15-minute FVG. Also, you'll notice this fair value gap is overlapping with the breaker block. Breaker block traders, this was the perfect opportunity to take a trade. So this is a market structure shift or change in set of delivery to the upside. Once that happens, below here was a liquidity sweep, and then price turns around, trades above our discount, giving us a 4-hour, a 15-minute breaker block inside a 15-minute fair value gap. So price comes back into the breaker on the fair value gap and then shoots up. So this was a good trade. You would have just placed your buy limit, stop loss below the breaker block, and you could target these highs right here. And this was a good 3.3R. Or maybe you would target, let's see if you can target something else. You will have target this high. That was a good 8.98. Anyway, apart from that, you would have gone to maybe to the 5-minute time frame and find what price is doing in this area. Now this is one of the best ways of finding almost zero drawdown entries or having a very tight stop loss to your trade. Very tight stop loss. Now see what is happening. Price is trading above our discount, where we are expecting price to react off of, and we have this 15-minute fair value gap. You can also take note of this 5-minute fair value gap right there. We also have a 5-minute breaker block. Again, same concept, but this time we are going to use a bullish engulfing candle of this breaker or fair value gap, this 5-minute. Let me change this to 5 minutes now. 5-minute FVG. So we have this bullish candle, 5-minute candle, closing outside the 5-minute fair value gap or breaker. There's a name ICT gives this when a fair value gap is overlapping with a breaker block. There's a specific name given to it, I've forgotten. Now this engulfing candle becomes a dealing range. Let us see what it does. So 50% of this dealing range, we want a discount of this area. I think we can now remove this because now we are dealing with a lower time frame values. So we have this area here. Let us see what happens. So price closes above, we have a dealing range. This candle opens, forms a tiny high, and then comes into this dealing range. Remember, this dealing range is inside the 5-minute fair value gap. At the same time, it's inside our 4-hour discount of the dealing range. So this is a very high quality setup that is supposed to give you very good returns. Now, as price is coming back to this area, you need to act very quick and set up your buy limit. When you set up your buy limit, you want your stop loss to be right around below this discount of the 5-minute 5-minute discount. Okay. With this, targeting these highs. Now remember, price was trading above, right? You can target the immediate swings before price came back into this breaker. That gave you a very sweet return of 8.11 risk to reward ratio. Apart from that, you would have targeted, let's see, apart from that, you would have targeted this high here, right? This high is right here, and that was a clean 11.17 risk to reward ratio. And apart from that, you would have targeted this high here, and let's see what that gave us. Let us see what that gave us. This gave us a risk to reward ratio of 29.59. Yes. Okay, yes, that is crazy, but this was a good entry, a very good trade setup. I don't know, you guys can check this out. You can check this model out. You can try and backtest it, forward test it, and see how it will work for you. You now see price went all the way up to around 3400, Anyway, so that is the trade review of gold for today. Until next time, have a good trading week. Bye bye.